Hey, this is Matt from InvestiQuant. Today is Tuesday, May 4, 2021. And before we get started here, I wanted to mention that on Thursday, after the close, we're going to be hosting a webinar introducing our auto trading program to those of you who are not familiar with it. So if auto trading is something that you are interested, auto trading is a way to trade some of our best strategies in a hands-free manner. We have an automated program that will trade in your account, and you will be able to get the same results as everyone else in the automated program, and those results have been pretty stellar. So if that's something you're interested in learning more about, click on the link below this video, sign up. We'll hold that webinar after the close on Thursday, and you can learn all about it. All right, let's hop into today's study. So yesterday we saw the markets gap up, and then it kind of dripped throughout the day. We had more of a consolidation-like day, though. It wasn't necessarily trendy, but we gapped up and kind of consolidated below the open the majority of the day and closed weak. So we ended up with a red candlestick. However, the bulk of that candlestick is trading above yesterday's or above Friday's range. And what we're going to do is we're going to take two concepts today. We're going to take a price action concept and we're going to take a market profile concept and put both of those together and look at a pattern that has developed ahead of the open here this morning. So let me go ahead and add all four instruments. The setup is based upon entering the market long at the open, which is 9:30 a.m. Eastern time, and exiting at the close, which is 4:15 p.m. Eastern time. Now, currently, we are trading lower in the overnight session, so I'm going to add that in the gap direction category, gap down. And this is something that the gap is not huge right now. So if by chance we do lift into the open, you may want to go in here and change this around on the study and make it so that it's more relevant to where the open is. But currently we are trading down. All right, now for the price pattern, I'm going to say that yesterday closed below the open. So that means it was a red daily candlestick. I'm going to grab that from the location last open and close, hit equals next to close under open. Next, I'm going to go to our market profile patterns library. And in here, I'm going to say that the value was higher yesterday. So that's in the value area migration category. I'm going to hit equals next to higher value. And that just means that the majority of the price action from yesterday took place at a higher area than where it was on Friday. So that's a higher value area that took place yesterday relative to Friday's session. So now we've got a red candlestick with higher value. That's a market profile term. And lastly, I'm going to put us above a 10 and 200 day simple moving average. And then I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time, when you gap down following a red daily candlestick that had a higher value area than the prior session. This is taking place in a bull market, which I've defined as above a 10 and above a 200-day simple moving average. Historically, the S&P has 164 samples, the NASDAQ has 143, 159 for the Dow, and 131 for the Russell, and that's dating back to 2003 where our data begins. And the win rates on these are fairly favored for the S&P, NASDAQ, and Dow. Those are all coming in right around 60%. S&P coming in 61, NASDAQ 59, Dow 60. Whereas the Russell is more neutral at 53%. So 3 of the 4 have had favorable win rates, at least slightly there, and Russell being the one that is not really showing any sort of edge either way on the win rate. If you look at the average win to average loss, you can see the average loss is larger than the average win in all 4 of them there. So the S&P has a larger average loss, as does the NASDAQ, Dow, and Russell. So historically speaking, 3 out of the 4 instruments have closed above the open about 60% of the time with this pattern, but the bigger moves have been to the downside. So hopefully you found that helpful. Good luck today, and we'll see you next time.